Welcome to this deep dive. You sent in a Motley Fool article. It was about Wayfair stock.
Oh, yeah?
Published December 15th, 2024, and it claimed to have found one brilliant stock to buy in December and hold for the next 5 years. Pretty bold, right?
Yeah, brilliant is a strong word.
Yeah.
It suggests that they see, a lot of potential upside in Wayfair, despite the stock's, recent struggles.
Exactly. The article acknowledges that Wayfair stock has plummeted about 85% from its peak in 2021.
Wow.
I mean, ouch. That's a serious drop.
Yeah.
But they seem to think this actually makes it a prime opportunity for investors. What's the logic there?
Well, a steep decline like that, it indicates that the market has grown quite pessimistic about the company's future.
Right.
The article must be pointing to some overlooked factors or potential catalysts that could, drive a rebound.
Yeah.
It's almost like they're betting on a contrarian play.
I see.
Hoping to capitalize on the market's negativity.
Okay, I see where they're going with this.
Yeah.
So what are these potential catalysts?
Sure.
What makes them think Wayfair is poised for a comeback?
One of the key factors they highlight is the housing market.
Okay.
Apparently, pending home sales have been, ticking upwards recently.
Okay.
The logic is that as more people buy homes, they'll need to furnish them,
Right.
which could benefit Wayfair.
That makes sense.
Yeah.
A healthy housing market usually spills over into other related industries.
Yeah, absolutely.
But hold on, didn't the article also mention that Wayfair's revenue was down this year?
Right.
That doesn't exactly scream brilliant stock.
Right. Their revenue is down 2% this year?
Yeah.
However, the article emphasizes that sales seem to be stabilizing around $2.8 billion per quarter.
Right.
And this is still significantly higher than their pre-pandemic levels, which suggests they've managed to retain a good portion of the customer base. Yeah.
They gained during the, online shopping boom.
Interesting point. So it's not necessarily about explosive growth right now,
Right.
but more about stabilizing and then potentially capitalizing on a recovering housing market.
Exactly.
It sounds like they're playing the long game.
Exactly. The article seems to believe that the worst is over for Wayfair.
Okay.
And that they're well positioned to benefit from any positive shifts in the, economic landscape.
Yeah.
They even cite the Federal Reserve's recent interest rate cuts as a potential tailwind.
Okay.
Lower rates could make it easier for people to finance home purchases.
Yeah.
Which in turn could fuel spending on furniture and home goods.
Okay. So they've laid out a scenario where a recovering housing market combined with lower interest rates could create a favorable environment for Wayfair.
Yes.
But let's not forget, this company's stock took a massive hit.
Right.
What happened there?
Well, their financials do tell a bit of a roller coaster story.
Their free cash flow, for example, went from a peak of $1.5 billion in early 2021 to negative $1.1 billion by the end of 2023.
Wow. That's a wild ride. What caused such a dramatic shift in their free cash flow?
It's worth exploring whether they overextended themselves during the pandemic boom.
Yeah.
Perhaps investing heavily in infrastructure or inventory.
Right.
That wasn't needed as online shopping growth slowed down. Or maybe there were other factors like supply chain disruptions that ate into their profitability.
Right.
Either way, that kind of volatility is something investors would want to scrutinize closely.
Absolutely.
Yeah.
So did the article shed any light on those potential causes?
They did mention that Wayfair has clawed its way back to positive free cash flow, reaching $43 million in the most recent quarter.
Right.
They attribute this turnaround to better cost management and disciplined spending.
Okay, so it sounds like they've taken steps
Yeah.
to address the issues that led to the free cash flow roller coaster. But are these improvements sustainable?
Right.
Can they maintain this financial discipline going forward?
That's the million-dollar question, isn't it?
Yeah.
The article seems to think so,
Okay.
pointing to their positive adjusted EBITDA margin
Right.
for the last 2 quarters.
Okay.
This suggests that they're becoming more efficient at generating profits from their operations.
Yeah.
But it's still early days, and investors will want to see consistent performance before they fully buy into this turnaround story.
All right, so we've covered the housing market, interest rates, and Wayfair's somewhat bumpy financial performance.
Right.
What else does this article focus on?
Well, they wrap things up by highlighting Wayfair's current valuation.
Okay.
Which is pretty interesting.
Yeah.
They have a price-to-sales ratio of 0.55.
Okay.
Which they argue is quite low, especially when compared to other discount retailers.
A low price-to-sales ratio could signal an undervalued stock.
Right.
But how do they justify that claim?
Yeah.
A low valuation doesn't always mean a stock is a good buy. Right?
Exactly.
Yeah.
A low valuation could indicate underlying problems.
Right.
Or it could signal a buying opportunity.
Sure.
It all depends on the context.
Right.
And that's where their argument gets a bit more speculative.
Okay, I'm intrigued.
Yeah.
Tell me more about their justification for this brilliant stock claim.
Okay.
Based on the valuation.
Sure.
What are they banking on?
They're essentially saying that if Wayfair can grow its revenue by even a modest, 10% annually.
Okay.
Which is, in line with the overall e-commerce market.
Right.
Their stock price could see significant gains, especially if that price-to-sales ratio improves.
So they're projecting a scenario where a combination of revenue growth and a reevaluation by the market could lead to significant price appreciation.
Yeah.
It's a classic growth stock play. But are they overlooking any potential risks? What about the competitive landscape?
That's a great point.
Yeah.
The article focuses mainly on, internal factors and the broader economic picture.
Right.
But it doesn't really delve into the competitive pressures facing Wayfair.
Right.
And let's face it, they're operating in a fiercely competitive market.
Absolutely.
With giants like Amazon, Target, and even, traditional furniture retailers.
Right.
All vying for a piece of the online furniture pie.
Right. So even if the housing market recovers and Wayfair manages to keep their financials in check, there's no guarantee they can fend off the competition and grab a bigger slice of the market.
Exactly.
Yeah.
To truly assess their potential, we'd need to go deeper into their, competitive advantages, if any.
Right.
Do they have a unique selling proposition?
Yeah.
Are they offering something that sets them apart from the crowd? These are crucial questions that the article doesn't really address.
And let's not forget the elephant in the room, Amazon.
Right.
They've been steadily expanding their presence in the furniture and home goods market.
Yeah.
How can Wayfair compete with a behemoth like that?
It's a valid concern.
Yeah.
Amazon has a massive logistical network, a loyal customer base, and deep pockets. Competing head-to-head with them on price or delivery speed might not be a winning strategy.
So what's Wayfair's game plan?
Yeah.
How do they plan to carve out a profitable niche in this crowded market?
Yeah.
The article didn't really elaborate on that, did it?
Not really. It hinted at their focus on cost management and operational efficiency.
Okay.
But it didn't provide specific details about their competitive strategy.
Okay.
To get a clearer picture, we'd need to dig into their marketing efforts, their product offerings, their customer service, and perhaps even their use of technology and data analytics to, gain an edge.
It sounds like we're missing a few pieces of the puzzle here.
Yeah.
The article makes a compelling case for why Wayfair could be a good investment.
Right.
But it doesn't paint the full picture.
I agree.
Yeah.
It highlights some potential positives.
Right.
Like the rebounding housing market and Wayfair's, improving financials.
Yeah.
But it also glosses over some critical aspects like the competitive landscape.
Yeah.
And the company's long-term strategy for growth and differentiation.
Okay. So let's take a step back and consider what we've learned.
Yeah.
The Motley Fool article presents a bullish case for Wayfair, arguing that it's a brilliant stock to buy and hold.
Right.
They point to a recovering housing market.
Yeah.
The company's efforts to improve profitability.
Right.
And a seemingly low valuation.
However, we've also identified some gaps in their analysis.
Okay.
They don't adequately address the competitive pressures facing Wayfair or delve into the specifics of their long-term strategy.
Right.
And while they mention potential risks like a weak housing market or high inflation, they seem to, brush them aside. Assuming the worst is over.
Right. It's almost like they're wearing rose-colored glasses.
Exactly. Focusing on the positive while downplaying the potential downsides. It's a classic case of, caveat emptor, buyer beware.
Exactly. Investing is all about assessing both the potential rewards and the risks.
Absolutely.
This article does a decent job of outlining the potential upside.
Yes.
But it's crucial for you to do your own research.
Right.
And fill in those missing pieces before making any decisions.
Exactly.
I think that's a valuable takeaway for our listeners.
Yeah, absolutely.
Never rely on a single source.
Right.
Even one as reputable as the Motley Fool.
Yeah.
It's crucial to gather information from multiple perspectives. Analyze the data and form your own conclusions.
Exactly.
And speaking of multiple perspectives,
yes,
this deep dive has focused mainly on the article's take on Wayfair. But I'm curious to hear your thoughts.
Sure.
What stood out to you from this discussion? What questions are you still pondering?
Well,
I'm definitely intrigued by the idea of Wayfair being a potential turnaround story.
Right.
The fact that they've managed to get back to positive free cash flow and are showing signs of improved profitability is encouraging.
It does suggest that their management team is taking steps to adapt to the changing market conditions and address, some of the concerns that led to their stock decline.
But on the other hand, I'm also a bit skeptical.
Sure.
The article doesn't really convince me that they have a sustainable competitive advantage.
Right.
They're going up against some heavy hitters
in
the e-commerce world. And I'm not sure if their current strategy is robust enough to ensure long-term success.
That's a valid point.
Yeah.
And it's something, you'll want to explore further as you do your own research.
Yeah.
Look into their marketing campaigns, their product selection, their pricing strategies, their customer reviews, anything that can give you a better sense of how they're positioning themselves in the market.
Great advice. I think the biggest question I'm left with is this.
Okay.
Can Wayfair truly differentiate themselves in a way that attracts and retains customers?
Right.
Even in the face of fierce competition from the likes of Amazon?
That's the million-dollar question, isn't it? And it's one that only you can answer after doing your due diligence and forming your own investment thesis. But that's, the exciting part of investing. The challenge of piecing together the puzzle and making informed decisions based on your own analysis and risk tolerance.
It's funny. All this talk about Wayfair and their strategy got me thinking about the bigger picture.
Oh, yeah.
What's the future of furniture shopping anyway? Will it all go online, or will brick-and-mortar stores always have a place?
That's a fascinating question.
Yeah.
And it really goes beyond just Wayfair.
Right.
It touches on, consumer behavior, technological advancements,
Right.
even the environmental impact of shipping bulk items.
Exactly. During the pandemic, we saw this huge shift towards online shopping.
Yeah.
Almost out of necessity.
Yeah.
But now that things are opening back up,
Right.
are people sticking with the convenience of online, or are they craving that in-person experience of seeing and touching furniture before they buy it?
There's definitely a segment of shoppers who value that tactile experience, that ability to test the comfort of a sofa or see the true color of a fabric swatch.
Right.
But on the other hand, online retailers are getting pretty sophisticated with their visualization tools.
That's true. I've seen some really impressive augmented reality apps that let you virtually place furniture in your own home using your phone's camera.
Yeah.
That could be a game changer for hesitant online shoppers.
Absolutely. And those technologies are only going to get better.
Yeah.
Imagine being able to, walk through a virtual showroom, customize furniture finishes, and see how different pieces work together.
Wow.
In a realistic 3D environment.
Yeah, that's amazing.
That could bridge the gap
between
online and offline shopping experiences.
It's almost like the lines are blurring, isn't it?
It is, yeah.
Maybe the future of furniture shopping isn't about choosing one or the other, but about finding a seamless blend of both.
I think you're onto something there.
Yeah.
We might see more hybrid models emerge where online retailers have physical showrooms for people to, experience the products firsthand, but then the actual purchasing and delivery process happens online.
That makes a lot of sense.
Yeah.
It combines the convenience and selection of online shopping.
Right.
With the tangible reassurance of a physical store.
Exactly.
And it could be a strategic advantage for a company like Wayfair.
Yeah.
Allowing them to leverage their online expertise while also offering a more personalized shopping experience.
Exactly. It would allow them to address one of the key challenges of online furniture shopping. Yeah. The uncertainty of buying such a large and expensive item without seeing it in person.
Right. You don't want to end up with a sofa that looks great online. But feels completely different in your living room.
Right, exactly.
Having that option to see and touch the furniture beforehand could make a big difference in customer confidence.
Absolutely, and it could also help them stand out from competitors like Amazon, who primarily focus on, a purely online model.
Yeah.
It's a way for Wayfair to carve out their own niche and appeal to a broader customer base.
Wow. This conversation has really opened my eyes to the evolving dynamics of the furniture industry.
Yeah.
It's not just about Wayfair's stock price anymore.
Right.
It's about understanding the larger trends shaping the way we shop and experience furniture.
And that's what makes these deep dives so insightful.
Right.
We start with a specific topic like analyzing a stock.
Yeah.
But we end up exploring broader themes.
Yeah.
And connecting the dots in, unexpected ways.
Exactly. And I think that's a valuable takeaway for our listeners as well.
Absolutely.
Don't just focus on the numbers. Consider the bigger picture, the human behavior, and the technological forces that are shaping the industries you're interested in.
Absolutely. Investing is as much about understanding the world around us as it is about analyzing financial statements.
Well said. So, as we wrap up this deep dive into Wayfair, I want to leave you with one final thought to ponder.
Okay.
Given all that we've discussed, how do you think the furniture shopping landscape will evolve? In the next 5 to 10 years, what role will technology play?
Right.
How will consumer preferences shift?
That's a great question to reflect on.
Yeah.
And remember, there's no right or wrong answer.
Right.
The future is constantly being shaped by, our choices and innovations. The more informed and engaged we are, the better equipped we'll be to navigate those changes.
Couldn't agree more. Thanks for joining us on this deep dive.
Yeah.
It's been a fascinating journey.
It's been a pleasure exploring these ideas with you.
Yeah.
Until next time, keep learning, keep questioning,
and
keep diving deep.